This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with the closing grain and livestock comments for August 18th, 2015. Corn market today, September up 3 cents, December up 2 3/4, Dees closing at 377 1/4. September soybeans down 13 3/4, November down 12 3/4, 904 1/4 on the close for November. September meal down 0.80, 324.60 on the close. September Chicago wheat down 6 1/4, 494 1/4. September Minneapolis wheat down 4 3/4, 508 1/4. December Minneapolis wheat down 5 1/4, 523 1/4. And September Kansas City wheat down 6 1/4, 476 on the close. The corn market got a little bit of a lift off the crop conditions ratings, falling 1 percentage point as the market was anticipating. Also around the marketplace, we've got a little bit of harvest working in, and we've got the ProFarm Crop Tour reporting a little bit lower yields than expected off the initial first day. We'll see what more we get today here, but we'd expect more of the same as a pro farmer walks into the fields and maybe doesn't find quite as good as fields as they look from the road, and that's kind of the story we're hearing out of the Eastern Belt. As for the Western Belt today, we're getting good rains here to start the week, and that's forecasted to move east, and that is really the detriment to soybeans right now and why the soybean market is collapsing. Down 12 to 13 cents is fully reflective of the ideal weather conditions we've got here. Some areas might start talking a little bit too wet, but so far today when you look at the radar, very good coverage, and that kept a negative tone around the soybeans. Also, no change in the crop condition rating, indicating that maybe yields are a little better than expected, but still, to USDA standards, we don't think so, and a lot of the marketplace doesn't. It's just very difficult to really combat or defend against that right now until we either get a change from USDA or we start to get some verification from yields or the ProFarm Tour. But as of right now, not a lot to grab onto. A lot of fund liquidation. Managed money still pretty long in the corn and soybeans, but they have weeded out some positions, and we feel as we start going short these markets in regards to managed money holding, that may be the time that things slow down to the downside and we set some harvest lows. We expect the next 15 to 30 days as kind of that time period where we look to have harvest lows in place already and then rally out of there. Did some statistical research today and shows some pretty good rally potential here as we set that harvest low. There's a strong seasonality here over the last 10 years to get some pretty significant moves higher. Maybe this year's only 70 cents off those lows, but still that would put resistance points at around 420 corn and around that 1050 mark in beans. So really at the end of the day, I don't think our ranges change all that much as we work ahead, just a little more dynamic as we're coming in here before harvest, trying to establish some lows here. As we look to the feeder cattle market, down 15 cents, 206.75 on the close there for October feeder cattle. Live cattle down 42.5, 147.27.5. October hogs down 15, 66.12.5. Really eerie, quiet type atmosphere here in the cattle and hog markets right now. For the cattle market, a lot of focus on the cash trade. Cutout values pretty much mixed right now, so it seems we've rounded out the seasonal bottom for some of the live cattle cutouts. The problem is we really got nothing to run to the top side, and with all these world problems we're hearing economically, that brings a sense of concern over the high-priced cattle that we have in the marketplace and leads us to believe that we're in a long-term downtrending pattern. However, resistance points, or at least targets rallying back, set up around that 151 mark for the live cattle October. As for the hog market, range-bound market, we apologize for sounding like a repeating record, but this range from really the 161 to 68 area in the October, the 59.80 area up to about 63.50 in the December is really home for hogs right now, and we believe will continue to be. We've got a huge slaughter pace. We've got good numbers around. We really see no need to really break out of either side of this range as we work ahead, so we look to more of a range-bound pattern. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.